The year 2025 has delivered a harsh reality check for the United States. Its currency, the mighty dollar, is in a freefall. This is not a slow, gentle decline. It is the sharpest drop the dollar has seen in over 50 years. Since the beginning of the year, the US dollar index, which measures its strength against other major world currencies, has plummeted by over 10%. This kind of volatility is unsettling for global markets and for everyday Americans. It signals a deep loss of confidence in the nation's economic stability. The reasons for this sudden crisis are, well, pretty complex. They are rooted in a combination of aggressive policies, political uncertainty, and massive government spending that has shaken the world's faith in the greenback. The primary driver behind this turmoil is the administration's unpredictable trade policy. President Trump's aggressive use of tariffs has created a constant state of anxiety in global markets. These taxes on imported goods were intended to protect American industries. However, they have instead ignited fears of escalating trade wars and higher prices for everyone. A temporary pause on new sweeping tariffs is set to expire in just a few days on July 9th. This looming deadline keeps investors on edge. The constant threat of new economic conflict makes it nearly impossible for businesses to plan for the future, creating a chilling effect on investment and growth. Adding to the economic instability is a climate of political brinkmanship. The president's frequent and sharp criticism of the Federal Reserve and its chairman, Jerome Powell, has further eroded confidence. Publicly demanding deep interest rate cuts while the Fed tries to manage inflation cautiously creates a picture of an institution under political pressure. This undermines the central bank's perceived independence, a cornerstone of a stable economy. International investors who once saw the U.S. as a beacon of predictable governance now see chaos. They are questioning whether American economic stewardship can be trusted, and honestly, that's a dangerous sentiment for the world's reserve currency. Compounding these issues is the nation's soaring debt. A recent bill that combined significant tax cuts with a large spending package is projected to add an astonishing $3.3 trillion to the national debt. This level of borrowing raises serious questions about America's long-term fiscal health. Economists and investors worry that this massive debt will eventually force the government to print more money, leading to runaway inflation that devalues the dollar even further. This fiscal recklessness, combined with erratic trade and political policies, has created a perfect storm. It is a storm that is now battering the savings and financial security of millions. The consequences of a falling dollar are not abstract economic theories. They are felt directly at the cash register, at the gas pump, and in every household budget across the country. When the dollar loses value, the cost of imported goods automatically rises. Everything from electronics made in Asia to coffee beans grown in South America becomes more expensive. American families are now finding that their paychecks do not stretch as far as they used to. The price of groceries, clothing, and other daily essentials is climbing, putting a significant strain on family finances and fueling a wider inflation that eats away at the value of savings. For Americans who dream of traveling abroad, the reality of the dollar's decline is a harsh awakening. A trip to Europe or Japan that seemed affordable just a year ago is now significantly more expensive. The US dollar simply buys less foreign currency. For example, the euro has gained nearly 14% against the dollar this year alone, meaning a hotel room or a meal in Paris now costs Americans that much more. This has forced many to cancel or scale back their vacation plans. The weakened dollar effectively traps Americans at home, diminishing their ability to experience other cultures and see the world. This economic pressure is hitting the most vulnerable populations the hardest. Retirees who depend on fixed incomes like pensions or Social Security are in a particularly difficult position. Their income remains the same, but the cost of everything they need, from food to healthcare, is going up. Their carefully planned retirement savings are being eroded by forces beyond their control. Young families are also struggling. As they try to pay for childcare, save for a home, and manage daily expenses, the rising cost of living makes it harder to get by, let alone get ahead. The dollar's fall is widening the gap between what people earn and what they need to survive. In this environment of uncertainty, investors are fleeing the US dollar. For decades, the dollar was considered a safe haven, a secure place to park money during times of global turmoil. That reputation is now in tatters. Investors, especially large institutional funds in Europe and Asia, are selling their dollar holdings and moving their money into safer assets like gold or the Japanese yen. This flight of capital only makes the dollar weaker, creating a vicious cycle. The market's message is clear: the world is losing faith in America's ability to manage its own economic destiny. Nowhere is the pain of this economic crisis felt more acutely than in America's heartland. U.S. farmers are caught in the crossfire of the administration's trade wars. When the U.S. imposes tariffs on goods from other countries, those nations often retaliate with tariffs of their own. These retaliatory measures frequently target American agricultural products like soybeans, corn, and pork. As a result, farmers have seen their most important export markets dry up almost overnight. They are now facing mounting losses, with crops piling up in silos and livestock prices plummeting. Many family farms, passed down through generations, are now on the brink of bankruptcy. The manufacturing sector, which the tariffs were supposed to protect, is also facing immense challenges. While a weaker dollar theoretically makes American-made goods cheaper and more competitive overseas, this benefit has been wiped out by the trade disputes. The volatility and uncertainty created by the tariff threats have disrupted global supply chains. American factories that rely on imported components are now paying more for their raw materials, which drives up their production costs. This makes it difficult for them to compete, and the constant threat of new tariffs makes it impossible for them to secure long-term contracts with international buyers. The impact extends far beyond specific industries, affecting the entire fabric of American life. Small business owners are struggling to cope with rising costs and unpredictable consumer demand. A local pizzeria, for example, might be paying more for imported flour and tomatoes, forcing them to either raise prices on their customers or absorb the loss. Retail stores that sell imported goods are in a similar bind. This economic pressure trickles down through every community, leading to slower growth, fewer job opportunities, and a general sense of anxiety about the future. The dollar's decline is not just a headline, it is a daily struggle for millions. This widespread economic strain is forcing people to change their habits. Families are cutting back on non-essential spending, foregoing vacations, and delaying major purchases like new cars or home renovations. They are shopping more carefully, looking for discounts, and trying to make their money last longer. Community support systems are becoming more important as people lean on each other to get through these tough times. The optimism that once defined the American spirit is being replaced by a sense of caution and worry, as people grapple with an economic reality that feels increasingly unstable and unfair. In the face of this growing crisis, the government's response has been limited and, to some, contradictory. There have been some minor attempts to de-escalate the trade war. For instance, the administration recently lifted certain export restrictions on chip design software being sold to China. In return, Beijing made some small concessions on the export of rare earth minerals. While these steps are a move in the right direction, they are seen by most analysts as too small to reverse the significant damage already done. They do little to address the core issues of unpredictable policymaking and rising national debt that continue to spook international investors and drive the dollar down. As Washington's official response remains uncertain, American households and businesses are not waiting for a rescue. They are taking matters into their own hands to cope with the new economic landscape. Families are becoming more diligent about budgeting, tracking every dollar to make ends meet. Many are exploring ways to earn supplemental income or are delaying retirement to build up a larger financial cushion. Businesses, for their part, are scrambling to adapt. Some are looking for domestic suppliers to avoid the volatility of international trade, while others are trying to absorb the rising costs to keep their customers loyal, even if it means smaller profits for now. The broader market sentiment remains overwhelmingly negative. A recent poll of foreign exchange analysts revealed that nearly 90% expect the demand for US dollar assets to continue falling. The consensus is that the ongoing tariff negotiations will be the single biggest factor determining the dollar's fate in the coming month. Short dollar positions, which are bets that the currency will fall further, have soared to a 2-year high. This indicates that professional traders and investors around the world are bracing for more weakness, not a recovery. The confidence that once underpinned the global financial system has been shaken to its core. The path forward remains uncertain. The dollar's rapid decline in 2025 is a stark warning about the consequences of volatile policy and fiscal irresponsibility. Rebuilding the trust that has been lost will require more than minor gestures. It will demand a return to stable, predictable economic leadership and a credible plan to address the nation's long-term financial challenges. Until then, American families, farmers, and business owners will be left to navigate the fallout, adapting to a world where the once mighty dollar no longer provides the security it once did. The search for stability has become the new American reality,